Bitcoin, Ethereum, Dogecoin. Cryptocurrency investing has been all the rage over the past few years. So should we get in on this? What is cryptocurrency anyways? We're chatting up all things crypto in this video.
Now before we even get into this thing, let's just put up a nice, big, impossible not to notice disclaimer. We put this in the description box of every single video we post, but just in case you hadn't noticed, any information contained in this video should not be considered or relied upon as financial advice, and we disclaim any liability in connection with the use of this information. Although I am a financial advisor, I am not your financial advisor. Everyone's financial situation is different, and you should consult a financial professional for targeted advice. Now with that out of the way, let's jump into the video.
Hey Wealth Builders, I'm Mishak.
And I'm Akiva.
And welcome back to another episode of The Bemused. On this channel, we talk about all things personal finance for young adults just like you and us.
So if you're into that kind of thing, go on ahead and join the Wealth Builder Squad by hitting that big red subscribe button. And while you're at it, click the notification bell so you never miss when we post new, fun, valuable videos just like this one.
Now, it's important to note that we're not cryptocurrency experts, all right? We're just here to share a little that we do know and discuss whether it's something we might get into. So let's start from the very beginning. Cryptocurrency is a digital asset. It is not considered to be real currency like a dollar bill, nor is it considered to be a security like a stock. However, it is a valuable asset nonetheless. Cryptocurrency gave way from blockchain, a technology that allows people to securely exchange value without the need for a third-party intermediary or financial institution. Blockchain technology can be used in a variety of forms and has the potential for widespread use across various industries, including voting and sharing healthcare information. Many people are optimistic about the expanded use of blockchain technology and have invested money into various cryptocurrencies as a result.
Bitcoin in particular has a fixed supply. Only 21 million coins exist, and about 18.5 million of these coins have been mined. Bitcoin mining is the process by which new Bitcoins are entered into circulation. People mine Bitcoins by basically solving really hard math problems using really fancy, sophisticated computers. People who mine Bitcoin work really hard. It can be a very long and intense process. However, it can be rewarding. If successful, miners get the Bitcoin without having to pay for it. Once coins are mined and put into circulation, they can then be transferred to individuals or companies or bought and sold in exchange for money. Like many assets, the price of Bitcoin is driven by simple supply and demand. When there's a lot of demand or Bitcoins being bought, the price will go up. Conversely, when a lot of Bitcoins are being sold, the price will decrease. Because Bitcoin is a digital currency, it can be securely stored in a number of locations, including things like USB drives or on a smartphone. Bitcoin paved the way for other cryptocurrencies, or altcoins as they're called, like Litecoin, Ethereum, Dogecoin, and countless others.
Now, quick commercial break. We created this new, fun, free quiz for you all to help determine how your finances are doing and give you resources and tools to help you on your financial journey. If you want to take the quiz, the link will be down in the description box below and pinned to the first comment under the video. Now, back to the video.
We're speaking from a US context here. An increasingly popular way to obtain exposure to Bitcoin is through purchasing shares of the Grayscale Bitcoin Trust, or GBTC, Exchange Traded Fund, or ETF. I know, that was a mouthful. However, GBTC is not a traditional ETF. The value of an ETF will typically closely mirror the value of its underlying holdings. GBTC is different in that it carries a 2% management fee, and it often trades at a wide discount or premium to the value of the underlying Bitcoin, which adds an additional level of risk for investors. The most popular methods for investing in Bitcoin directly is buying the asset on exchanges such as Coinbase or Gemini.
There are some pros and cons to consider. On the plus side, there's a lot of potential for growth. For example, Visa has stated that they are working to enable purchase of Bitcoin using Visa credentials and allowing Bitcoin to be used for purchases through the Visa network. Morgan Stanley is rolling out 3 Bitcoin funds for use by their wealth management practice. A number of public companies, including Tesla, Square, and MassMutual, have announced plans to acquire Bitcoin for their own portfolios. And even vocal Bitcoin critics like JP Morgan CEO Jamie Dimon have acknowledged blockchain's great potential, while still remaining somewhat doubtful about Bitcoin itself. But let's not neglect the risk involved. Cryptocurrency's value, as we've all seen, is very volatile, widely swinging in value on a day-to-day basis. With Bitcoin's limited supply in particular, we have to see how this inter-person trading affects once all the coins are mined. Blockchain technology, while it has been around for a while, is still pretty new in the grand scheme of things, so organizations could be slower to adopt this technology than some anticipate. It also seems like the government is becoming increasingly involved in regulating cryptocurrency exchanges and initial coin offerings, or ICOs.
If you're brand new to investing, it's critical that you understand what you are doing. Many people are quick to jump into the newest flashy, get-rich-quick type of thing. Get a solid handle on the fundamentals first before moving into more complex investments like crypto. The reason why we don't hold any cryptocurrency right now is because we really wanted to take the time to understand this particular asset on a fundamental level, the growth potential, and the risks involved. Even if we do invest in cryptocurrency in the future, it definitely won't make up a large portion of our overall investment portfolio. Diversification, especially with an asset as risky as this one, is key.
Now, if you're a crypto fan, comment the word fan down below. Or if you think this whole thing is destined for failure, comment the word fail down below. We'd love to see what y'all think about this topic.
We dive deep into how investing works, how different investments get taxed, saving for retirement, and so much more in our program, Money 180. So if you're interested in learning more about that, the link is in the description box below.
Don't forget to subscribe and hit the bell so you never miss when we post new content. Thanks for watching, and we will see you in the next one. Bye. Bitcoin, Ethereum, and Dogecoin. Cryptocurrency. What?
Cryptocurrency investing has been all the rage.
What is crypto? Wow.